Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. This is our weekend public show that we do on the weekends, shortly following our level 1 class. And it's put out on YouTube. I actually have the YouTube page up and running. On the weekends,
Hey, look at that.
shortly
YouTube's
following
working.
our level 1. That's good to see. Lots of people piling into the hangout here, so see, it's fairly active group here this morning. A few people over there on YouTube popping in and out. See, zipping all over the place. I do have one screen specifically for the OBS, which I keep sort of running out of the corner of my eye. Then I got another screen for the TRI chat room. And I got another screen for the YouTube page. So this is going to be a fun little dance here between all these. Maybe I'll move this over a bit. But I see you guys over on YouTube, and this is the free audience. So I'll just say hi. If you have a question, feel free to ask. I'll try my best to answer. I mean, I'm just another guy in the marketplace trying to do my thing. I've been at this game for a few years. I certainly don't have all the answers. Nobody really does. And I guess I've learned over the years a few sort of best practices. And really, that's what I'd love for me to be, is just sort of the demonstrator of best practices here. As well, I'll start off this conversation. I know a lot of people here are very crypto oriented, and ironically enough, I actually rely on the crypto community for a lot of the fundamental analysis of these ideas. So if we do happen to talk about a crypto coin, please understand I really don't know the backstory that well of these things. I'll tell you about the charts, what I see happening in price action, but I'm not the best at fundamental analysis on these cryptocurrencies. Other than what I like to do, if I was going to look at them, is I'd like to try and figure out what the cost of production is. So when it comes to something like Bitcoin, you'll often hear me talk about what's the cost of production. That's value. But with regard to a lot of these esoteric cryptocurrencies, somebody there was just mentioning about Grin there in the YouTube page. And I didn't know this because I really don't know the backstory that well, but from what I understand, they have like a whole bunch of inflation or something like that. Yeah. And Kobus even mentions here, Grin has a lot of inflation coming into the market, so beware. What might be interesting if we looked at that is whether that's reflected in the price action. But good comment there, Kobus. But I can't really comment too much about the fundamentals. Brian, I mean, what am I? There's two letters of the alphabet. I mean, you want to make Brian really simple. It's just two letters of the alphabet. Show me either of these two letters, and then I start acting. Let's see if anybody on the YouTube page. All you OGers, Joshua, you can't answer this. What are the two letters? It really comes down to that. And that's the irony of it all, is I learned these two letters, forever ago. Easily back in the 1980s, I was first introduced to this. And it's taken me forever, to actually come full circle and realize it all comes down to these two damn letters. Hey, there you go. Way to go. I mean, it's just that simple. That's the irony of all of this. But anyway, Brian's getting all excited now. We do have a chat box open in the lounge here, so I guess I better keep this as open. All right. Hi, Stuart. Stuart's chatting away here. All right. Okay, so where should we begin? I mean, what I'll probably do here, as I said, we can leave the Q&A open. That's really sort of what this weekend show is all about, is just a follow-up for the level oneers, and I asked the level oneers whether they'd like to do a broiler chickens, and they seem to have gotten a pretty positive response from them. So please, if you have follow-up questions, actually it's interesting, this week's module is all about risk management, wasn't it? So really, really tough conversation. What kind of risk taker you are, and I say it with a regret to a certain degree, but I don't think we drove home enough during that crypto bull cycle about, if you are going to be a quote unquote little old lady risk taker, what does that really mean? And it might mean that you have to sit on a underwater or a position that's negative on your balance sheet, a paper loss, if you will, for some time, you know. And on balance, if I looked at somebody and they had, I don't know, $10,000 in a little risk portfolio, and they had put $500 into 20 different names in the crypto space and said, I just want to be invested in this space. I'm nice and diversified. Um, I think, unfortunately, in the crypto space, it means you better plan for either, if your coin's listed on an exchange, that listing might dissolve, they'd be delisted, and what are you going to do if it's delisted? But diversification purposes wise, especially if we concentrate on things like reload zones, trying to buy at least 61.8, if not 78.6 of the most recent range. If you just spread your money out, probably a lot of those names are heavily, heavily underwater, but a little old lady's just sitting there long. And if it's one thing that I've noticed, and this is the irony of this space, is everybody, of course, loves the volatility to the upside. And these things can go absolutely nuts, and it's venture capital. It's just the way it is. What's the market state? But they absolutely hate it when it's insanely volatile to the downside. So the good part about what I think is that, they say that typical bear market is about 18 months in duration, so we've definitely been through that. We've got, fundamental drivers that are at least going to inject some positivity in this space going forward, things like halvening events and stuff on Bitcoin. The regulators, it feels to me like they're getting a little bit less heavy duty. So, and I do see like things like ICOs now are passing SEC tests. Ironically enough, at some point the bear will just come to an end because all of the selling's done. We start the whole damn game all over again. So I don't know exactly when that is in crypto. I mean, nobody does for certain. There's one letter of the alphabet when you start seeing these on the weekly price charts. You can start taking some confidence that that at least bottoms are starting to form. That's always good. And interestingly enough, things like sentiment-wise, I am starting to see some of the old participants from the last bull cycle that just sort of disappeared there. Through late 2017 and all through 2018 and most here of 2019, I see them starting to reappear again. So, for those people that are crypto oriented, it's we are working our way through the bear, and the great part about capitalism and markets is they go up just as fast and just as violently as they go down sometimes. So, hang in there, all you little old ladies. There's really nothing for you to do if you are invested. For the traders, I think this is a pretty active market. In fact, finishing off that sort of thought about investors, we were actually on the site passing around. We had some really cool sites, and Stuart, if you're still on the call, you have a really cool site that I think he shared with us recently about dollar cost averaging. And just slowly nibbling away over time, and just, and ironically enough, people that are dollar cost averaging, and if you have that link, Stuart, I'd love if you could throw it up. I'll throw it on the YouTube page. It's those are the kind of approaches where ironically that could be it. Let's see what he's got here. Open link in new window. Yeah, dollar cost averaging into Bitcoin. So this is the link that Stuart shared with me. This happens to be on Bitcoin, but I suppose you could do this on I know there are sites where you can plug in any platform. But this is the kind of stuff that little old ladies should be concentrating on, and you're just slowly nibbling away over time. So I've shared it there, the link on the YouTube feed. Anybody watching this video later on, that's great stuff for little old ladies dollar cost averaging their way into ideas. And the irony of all of this is dollar cost averagers, actually you would prefer to see the price go down. Because in that way, on your next purchase date, you actually get to buy a little bit more with your money. But anyway, where should we begin here today? Again, this module for level 1 was risk management. And it's a tough concept. I'm not going to sugarcoat it, but really take the time and really look in the mirror and try and figure out what type of risk taker you are. Now, if you want to gamble in this market, and you are don't want to just buy an asset and sit on it and just see if it grows over time, then you're probably, ironically enough, wanting to actually keep most of your money in cash. And in the trading program today, one of the questions for your little quiz, I think it was in the quiz, but it definitely will be on the final exam, is, if you are a trader, what position should you be in if you're not in a trade? And the answer, I think, is cash. So, there are many different ways to skin the cat, and actually, interestingly enough, we'll probably go through like several different trade setups today. Like right now on the site, I'm just verbally walking people through not only sort of like position people who are working at and looking at the weekly price charts, but also people who like to trade algorithms, swing traders off of like 4-hour charts. It was actually a really cool setup off a 2-hour chart. Hopefully we can get to through today if I don't spend too much time blabbing away here. All the way down to, at the moment, I'm having a lot of fun just vetting out a day trader setup that I've been running on Bitcoin recently. But what's really interesting is it's not so much that the setup doesn't work. It's a question of, does Arthur Hayes' commission structure and this setup agree, and is it even realistic, and what kind of position size do you have to put on to actually make the trade worthwhile? That's a fascinating conversation, because I'm actually taking this same day trader setup over to the futures markets. And what's so ironic about this space, I mean, it's almost funny in a way, because when I started this adventure back in 2013 or so, 2014, it was actually the exact opposite case, where the commissions in good old-fashioned stock brokerage industry were really high, and crypto commissions were really low. And now it's actually the other way around. On Interactive Brokers, which is, I think, is our sort of favorite international site for trading the broader markets, I can do round turn now for like $2. So it's almost ironic that we've come full circle. But anyway, the point that I'm trying to make here is I'm now taking that same day trader model, and I'm taking it over to the futures industry to see how it performs. So, when I have these conversations with the public, please keep in mind there's many different participants going on in the market. It's not just, one time frame. I would like to keep this sort of crypto specific, so I'm not going to go too much into that kind of stuff about trading futures contracts here. But, this should be sort of crypto-centric sort of conversations. And I really like this study. This gentleman, and I don't know what his real name is, but Fitbee on Twitter. I see him banging out lots of tweets and stuff. This guy here. Oh no, Phil. Phil Bitcoin sign, I guess, whatever. But he was the one who actually put this study out. So, full acknowledgement to him, and I always like to, give appropriate shout outs where they're due. So, where the hell was that chart? Over here. I like this framework for us thinking going forward. And I also, to a certain degree, also see the market sort of validating this framework as well. This is a basic premise that this is basically sort of like Bitcoin's growth curve. The fact that it has a limited supply is a huge selling feature for Bitcoin. And I think it sort of makes this kind of conversation possible in a weird sort of way because of the built-in, you call it inflation, deflation, whatever you want to call it, of this happening. I think because of that, we have to follow along this curve. It doesn't really have any choice. And I think the big message that I take away from this kind of study is we go through periods, where, sort of is this a natural growth curve? I'm not quite sure how you describe this mathematically, but you can clearly see that the market is respecting this curve quite a bit, a long time here. And then also, too, what I noticed, and I don't know if this is a mathematical relationship. It'd be interesting if we got Murad on here and talked about pi. My hunch is this purple curve is probably some sort of pi relationship to this original curve. But the point of the matter here is if we basically duplicate that green, orange, yellow, whatever the hell color that is, curve up here, you notice that price seems to run into resistance whenever we bump into it, sort of through Bitcoin, sort of, let's call it like the consolidation phase or the cleanup phase, or, after the blow off top euphoria. And then after a period of sort of checking this natural growth rate, we go back into these crazy ass sort of bull run, face rip, BitConnect kind of environment, Mt. Gox kind of environment. This was Silk Road, if I'm not mistaken. And I guess you could make the argument we got, into the spring and early summer there, we got a little bit sort of real, sort of, kind of frothy again. People were all rah, 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 moon, 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 all that kind of talk, which, what a coincidence, right up against this purple line. And, as you can clearly see, we backed away from it. My hunch is that this, yellow, green, I'm colorblind. I'm not quite sure what the hell color that is. I think it's yellow. But my hunch is probably we got to come back and visit this, right? And it's just really simple cleanup process. I find it incredibly coincidental that I happen to teach on the site. I like to use Fibonacci retracement levels for trade location tools. And I used to work with a prop firm, and one of the really good traders there, he and I used to trade crude oil, and he would religiously trade this 61.8 fib. And so affectionately in my education programs, I like to call it the mountain man level, because that was his, his name. Again, internet. I don't know if anybody's name's actually what their birth name is, which makes me really odd. I'm Brian Beamish. Nice to meet you. No funny little name for Brian, but anyway. This gentleman's name was Brandon, but on the site he went by the acronym Mountain Man. So he used to trade at 61.8s religiously. And so in my education program, the way that I like to connect ideas for people to learn and remember things is to give them fun, actionable names. We put funny GIFs on the site of, various different Mountain Man kind of acronyms so it sticks in your brain. So everybody on the site, of course, knows 61.8, but also Mountain Man. And that's sort of like the starting area where we know that institutional players are going to start coming back in on the buy side. And Brandon, of course, would be sort of that typical kind of institutional player. Quite often what ends up happening is we tag Mountain Man level and there's a violent reaction away from it. So it doesn't necessarily mean it has to bottom there, but my hunch is that's sort of the start of the area where we can start thinking about the big boys are really going to step up again. I suppose, there's a bit of a problem with this chart here in that, and somebody actually pointed it out on the internet, Twitter, whatever, recently, that we could potentially actually be making like a really big head and shoulders level here. Where this key low, right, we like to call these the institutional fingerprints, or basically where the last bear move, keep in mind this is a weekly price chart, somebody stopped the bear there and started to actually buy and said, no more down, you go up. So that's a pretty important level right there, those key lows. And you also notice too, like symmetrically, that head and shoulders kind of conversation, you can almost see how the market is sort of playing with this level. If that kind of head and shoulders pattern does develop and we lose these levels hard, you might find that we just don't stop at mountain. We just blow right down into these levels. And if we do like measured moves, we should all be cognizant of the fact that if this is a head and shoulders, you can see that price size. Now this is a log chart, so that the actual line will change. I'm just going to have to eyeball it. But you can see it's something around like that. There to there, there to there. Yeah, that's pretty close. So somewhere down in this area, if we do head and shoulders out, it's a very realistic possibility here, folks. I'm not going to sugarcoat it. I thought that was an interesting tweet somebody put out earlier in the week. So this is gonna be a slog here. And then also too, remember, on these kind of dumps, right? What's the sentiment in this space when we come back against this yellow line? Usually it's the sky's falling. Now, again, you could make the argument, put yourself on a dollar cost averaging plan, buying when they're, how's it go? Selling when they're yelling, buying when they're crying. Seems like every time this yellow line is tagged, they're crying pretty hard, So, on that head and shoulders, maybe we get some crazy ass, kind of like this dump. I don't know whether you remember that. That was the Mike Hearn dump. Down to $150, rage quit. That's it. I'm selling all my Bitcoins. And that was, of course, the bottom, right? So, maybe this the head and shoulders resolves itself like zing, zing kind of thing. That can happen, sure. But my hunch is, if we look back 6 months from now, I got a funny feeling we're going to do some sort of bottom along this yellow line here. It would just seems logical. And then kind of like what I said just there a few minutes ago, I like how the market itself seems to be validating this study. Notice W's right on that. And then also too, off the purple or pink or whatever the hell line this is, notice a big M came in off of that. Remember I had said earlier, there's only 2 letters in the alphabet that I really give a shit about, right? Screw English class. Just make damn sure that you can draw your M's and W's correctly. That's the only thing that matters. In fact, we should probably change like the high school curriculum, right? Just be able to do M's and W's and the rest takes care of itself. Anyway, I'm just being a bit silly. All right, so that's sort of your bigger picture. Right, and for the investors, it seems logical to me that we should be looking for some sort of test again of this yellow line here. And really, I love when trades set up off 78.6. In fact, that's almost exactly what this was. It's almost sick when you look at the chart. But if we could get like a nice W to develop here below that yellow line and then recapture it, that would be absolutely perfect in my eyes. So anyway, we'll see what happens. Only time will tell. So, that's sort of bigger picture, kind of like fundamental in a weird sort of way, and like bands of support and resistance and bigger picture fib levels, that kind of thing. I also like the fact too that as of halvening, if we make the argument that the cost of production was like $2,000-$3,000 a Bitcoin over here, and please watch our old Broiler Chicken shows. We did a lot of conversations about that in the spring. then, if the cost of production doubles by the time we get here, well then, 5, 6 thousand for cost of a Bitcoin, that makes logical, fundamental sense to me as well. Now, when we go to the price chart and try and figure out what the hell's going on here, I know this chart's extremely busy, so please forgive the intensity. I had said earlier, remember, 78.6 off of this original massive range was that 4,300, and notice how the market politely put that W in right through 42, 4,300 right off that 78.6. I mean, it just makes you sick to your stomach when you see this afterward. Actually, I had thrown this massive harmonic pattern on here, actually somewhere like over here, and just sort of postulated, what do I kind of think the future might look like for this asset? And this is sort of what this, I got to say, it's actually playing out pretty well here. In that, if this was a massive harmonic, I actually like a dip into the fall here, into the end of the year. And then, this is a classic back the market up so the institutional players can get in at good levels, expecting the public to get all rah enthusiasts, be talking about Bitcoin again and how wonderful it is into its happening event. And actually, I had a really cool chart. I don't know. It's not weird. I've forgotten to reload those. But anyway, I had a chart that actually laid out happening events and Jupiter Saturn cross, and we have like Pluto Saturn cross coming up here in January. So my hunch is there's going to be some sort of big sort of pivot for Bitcoin around the end of the year. I really like that idea. End of the year, January, February kind of thing. Pluto Saturn cross sets the base for the new sort of financial order, and we just get a monster rip-roaring rally that I actually think could take us all the way back up to like, good 15, 16, 17,000 on Bitcoin into the U.S. presidential election in 2020. It was interesting right through here. Goldman Sachs came out and had this upside objective of 13,000 and change. So I'm going to keep an eye on this because I remember Goldman came out and said that we think it's going up to 13, 14,000. And that would be sort of the natural finish of this harmonic move. Then once we get to the U.S. presidential election, my enthusiasm will definitely probably need to be reassessed at that point. If you can sort of focus in, speak of the devil. If you can focus in taking advantage of this next probably 4 or 5 months here, to try and position yourself for that anticipated rally. And this bottom here actually is sort of March. It might come earlier, right, that I've just written on here. I mean, it might come like something like that. Tough to say. But, isn't it, if we follow this path, Shane here is my planetary guru. And he was the one who actually pointed out the Pluto-Saturn cross. But wouldn't that be absolutely textbook perfect if we got that nice, beautiful, well-defined bottom? I mean, wouldn't it be awesome if we just got like the most beautiful W came in here right through that Pluto-Saturn cross, and we look back 10, 15 years from now when we go, holy crap, that was the exact moment to get in, man. So, Shane, you know what? I got to screen capture this and save this somewhere, right? You got to put this somewhere. So we can say at least, I'll throw it in the lounge, but we can say at least, 4 or 5 months ahead of the event, we were already getting ready for it. And for whatever it's worth, YouTube audience, TRIers, whatever. Shane, a couple OGs that are local here in Vancouver and I were going to actually build a plan to start loading up on call options as we come down into here. Because I think that there's actually a pretty good rally window here that could happen, following the end of the year here. So I'm super, super jazzed about this idea right now. The problem here, of course, is, are we there? No. And the worst part about this is, what's so sad is that, we often talk about 50% rules. And I remember I've done a few of these videos here over the past week where I've just simply said we're in kind of like a vortex of Mr. Gann right now. We're just oscillating around this goddamn 50% level. This happens a lot, right? And it's not really a good place to be a buyer. You can see where Brian wants to buy down here. But at the same time, too, it's not really that good place to be a seller. If I actually wanted to be a shorter of Bitcoins in earnest, I draw my fib off of these recent lows back up to the high, and you can see where actually the really good short trade location is. That's up at like 11, 12,000 bucks. I mean, I know, call me crazy, kids, but there's a very realistic possibility Bitcoin jumps like $3,000 or $4,000 here. It wouldn't be absolutely out of the question. This is kind of like I like to call this no man's land. It's too late to be a seller, too early to be a buyer. So it's tough for me to do these videos week in, week out and keep saying, I'm sorry, we're not really in a good buying area. I'm sorry, we're not really in a good selling area. All you investors, you just got to sit there and do nothing. And it sucks. I'm not going to sugarcoat it. I mean, I want to sit here and go, yeah, this thing, you gotta buy it, gotta buy it. But it's just not there. So, with all that said, investors, you're just cooling your jets. I mean, if you want a dollar cost average, nanny nibbles, little old lady kind of concept, I don't have a problem putting yourself on like once a month, once every couple months, once every 2 or 3 months, whatever. And just go ahead and you don't even really, and as I've said before, the dollar cost averagers, you're actually hoping for down. I want to see bear. So, the next purchase down the road, you're going to be able to buy a little bit more with the allotted amount of money that you threw at this. For the sort of position traders that want to time their purchases, you got to hunt for this stuff, right? Good old W's. For 2019, when we look back, you can clearly see exactly where the buy signal was. And, the irony of it all is our rule is we want to force ourselves to take profits at the 50% rule, especially new people to investing. And that was the trade there. This was extra fluff up top. Actually, there's this is the 50% rule. I beg your pardon. Sorry, everyone. Right there. So there is the profit objective. It was a monster trade. Hats off. We have some people at TRI that will actually set the mountain man level for their objective to sell. That took balls. I'll tell you, that took balls of balls. I like the idea of just using the 50% rule because you got a pretty good statistical shot that it's going to get hit. And now we're basically going through the exact opposite on the way down. And this is like Chop Vegas. In fact, I've heard a lot of my co-host who does the daily briefs with me Monday to Friday, he was telling me that there's one guy who's super popular on crypto Twitter. He made gazillions of millions of jillions of dollars on the way up, whatever. And he said he's publicly come out and said that he's going to buy his Bitcoins back at $6,000. I think it's not the best idea to just blindly buy a level and declare this is the bottom. That's always asking for trouble. And my simple message to everybody is try and have at least the 3 unrelated reasons to consider taking a trade. And interesting enough for Bitcoin, this was actually pretty easy, which is ironic. But trade location at or below reload zones. Signs of momentum divergence. Willy stupid. Beautiful W's in MACD with breakouts. And then do I have a W to work with? I mean, that's the worst part about all of this is this trade was actually extremely well telegraphed. Everything after that was just fluff. And what really sucks is, all the talking heads and stuff like that are talking about up here, but this is just fluffy fluffs. And like I said, if this head and shoulders out here, we probably have to come right back down into these levels again, kind of like my desire. So what's a person to do? I think I've given the investor message pretty clearly here. Too late to sell, too early to buy. If we go down a little bit lower time frame, maybe think about like what the traders, say like the daily swing traders are thinking, kind of idea. I think this is more further testament to that idea that I think they're still waiting. This happens to be the CME contract. We did a coinage show recently, and I was pleased as punch to hear that the fundamental guys in the space are actually paying attention to gaps on futures price charts, which I was like, okay, well, these guys, they're growing up. So Alex made reference to this gap here on the CME futures, and again, that's down there at about that 6,000 area. I mean, really, we could argue look left. There's this big old funny tail here that's down to that level as well. Wicks and tails like to get eaten. If we get going in earnest, really look left. Where's the last real key support area? On this CME futures contract, it's this market structure right here, right? So that low is 49.30. This low here is 4900. This low here is 47.80. So, and also too, look at this insane volatility here. I kind of postulated that this looked like a fractal to me. Sometimes, the universe can act in weird sort of ways. In this case, the maple leaf, the left shoulder is actually much bigger than either the head or the right shoulder, but hopefully you can see the symmetry here. And if this plays out, symmetrically, we should finish this move with some sort of big orgy like this. I think it's coming. The only issue here for a guy like me is I've been working with trend lines for so long. This is actually a validated trend line because not only do you have higher lows here, but you actually have market structure signal that validated this trend line. So it's active, it's alive. Oh, here I am, I'm a trend line, damn it. And I was kind of thinking that this trend line was not going to go down without a fight. And that's exactly what's going on here. So, for the day traders down here, oh my God, this has been a pain in the ass because the market like dips. Okay, I'm going to break. No, I'm not. Okay, I'm going to break. No, I'm not. It just drives you nuts. But, that's a good testament to like active trend lines and how powerful they can be. And ironically enough, our rule actually is we really can't take the trade until we see structure on the other side of the trend line. So this is going to be a real battle, this trend line, no doubt about it. Sometimes to actually resolve this trend line, the market actually has to gap lower violently. And then at some point down the road, it'll come back up and fill in the gap, right? So you never know how the hell these damn trend lines resolve themselves. But just taking the trade blindly at that, just going, okay, I'm going to short here. Oh boy, that's asking for trouble. The sort of shorter time frame participants still think we're pointing down. We haven't really put in any, and actually somebody even mentioned this on one of the free sort of weekly videos that I do, that yes, this was a candle high-low clothesline, but it wasn't actually a clothesline or candle high-low W, but it wasn't actually a clothesline W. So what do we mean by that? If we actually change this to a line chart, you can see this looks really sloppy here still. And this candle, it's messy here. And I suppose you could even argue from this CME contract, we've actually broken any sort of signs of W here. So from a clothesline perspective, this still looks really, really messy. But we can actually see that better if we go over to like the cash markets. And we've been talking lots about this, that, at some point Bitcoin's going to have, in my opinion, I mean, it doesn't have to, but in my opinion, we have to come down to this mountain man level. But we'll see how it goes. Only time will tell. There he is, sitting at about 7,200 right now. So, were we going to work our way down there? We had things like, this is a sloppy short setup. It's not really the best setup. I took the measurements off of this little market structure top here down to there, and then there to there. I just found that when I drew it all the way back up here, 25, and then I compared it to drawing it off of this high, the 25 level just set up so nicely off that shelf. So anyway, I'm using these numbers right now. And I noticed, like one high, two highs, three highs, four highs, five highs, a break. So, as of like last week, the bear was still very in control and driving the bus. And that's sort of what this trade metric is here. The bot itself has a huge, actually, no, this is the algo signal. So I beg your pardon, disregard that for a moment. The bot has a huge range here. It's nowhere near hitting its move stop to even scratch yet. And really, it would expect this wick all the way up top here to actually even get eaten. So let's see how this bot develops. I have no idea what's going to happen here, but it's fascinating how the entry off of that bot set up nicely off that shelf there. And probably my hunch is if this M right here gets broken, then this thing's probably going to zip up top here pretty quick. The algo, which we run off these swing trader models, it sort of requires that, and it's just the incantation that I built. I mean, it's open to change by anybody. But it basically says we want an Uber reading, and then we want some sort of market structure to frame the trade. And like I talked about there earlier, lots of M's, the 25 level. And I love it when the algo fires a signal and the bot level happens to be exactly the same level. I love those. So, as we were sort of working our way through the week for the swing traders, things were pointing down. This is the algometric, this trade 2-to-1 here you see on here. And you can see I like a general rule. It's a good idea when you're trading to try and make sure you can actually build rules into your trading so that if you are trading away and you happen to be sitting on a position that happens to be moving very comfortably in your direction, you don't end up sitting on it and it actually turning into a losing trade and you lose money. That psychologically is really tough to deal with. So one way that I do it, and of course the bot has move stop to scratch, move stop to trailing. It has these big numbers built into it. And actually our level 1 instructor who just finished the level 1 class, he was talking a lot about with students about today was all about risk management. But he actually took the bot trading rules and he applied them to things like L-tangonators and stuff, and just these kind of ideas. How can I build rules into my trade so that if the trade is going my way, but then decides to reverse, at the very worst case scenario, I just walk away at scratch and, just wait for the next trade. So I like to include sort of in this model, if I see half of the move, half of the anticipated move, realized, I'll just move my stop to scratch. And if it comes back to scratch, then I just walk away. It is interesting to see how the scratch level on this trade happens to be now just above this moving average. And you can see, and I mean, I didn't plan this, but fascinating to see how the market rallied here and just stalled once again at this crazy ass moving average. And actually we were even talking on the site, are we going to dump? Are we going to dump? Yeah, it's time ready to dump. And I actually drew on the site these sort of squiggly lines between these two trend lines, and I was just like, this triangle needs more filling out. And sure enough, a big old fucking rally just piled in here. So go figure. What a surprise. We've rallied right up to the trend line. Of course, as we've said repeatedly, a trade to a trend line is a terrible place to put on a new trade. If you're thinking about buying this, and this might be a breakout, you got to wait for the trend line to be broken, and then please give me a W on the other side. Something along those lines. And that's a lot to ask for right now. So let's see what develops. On that sort of note, if we pop up to here, then this trade gets closed out at scratch. And, the algo, you can see he is reading Uber Beer. Bull, let's assume, boom, we break out here. I would absolutely love for the algo just to sit either bullish or bearish. We carve out this W, and then that'll be a nice little bot setup with an algo signal. Which, who knows what it's going to look like, but might look something along the lines like... that. So, that could develop. It's definitely possible. But for the time being, that's not a topic of conversation for me. Right now, I'm just simply waiting to see whether this trend line here. My hunch is that we carve out a nice little inside bar, maybe a little bit of FU against here. This thing might get busted out, tough to say. And then we roll back over. So, from the swing trader's perspective, these bigger shorts off of these levels, they're just working away. Nothing's really changed here. Algo signals, and of course they don't want a winner to turn into a loser. Trade was basically working in your direction. We didn't hit 2-to-1 yet, so they might just get busted out at scratch. If we go down another factor, this is a 2-hour chart, and I saw a lot of people on the site posting this today, and I was so proud of them. This is just awesome. Ken Adams asked, this TRI, you mean the algo over here? TRI sin BDB? This is ancient Chinese secret. This is in-house stuff. I only share it with people that are pretty far along in our education program, Ken, sorry. And really, frankly speaking, for new people to trading, it's not in your best interest to just be trading with algos. You got to learn the process, right? Work with a trading plan. What are your 3 reasons why? You have to understand the internal workings of the algo to understand what the reasons are behind it, etc., etc. Okay, so moving on. I did notice, and of course there's that big wick that we talked about that really the bot would have to risk against. So interestingly enough, as we sort of zoom down on lower time frames, you notice that, gee whiz, this is a pretty darn big trading range. Probably a really good example now, there's always a question of how much data you include into it, but just the data that I have on the screen, Colleen, let's just go with that. Really good example of the market went below value. Wasn't a heck of a lot of interest to doing business down here. You notice on the profile, look how small this node is here. All right, that's when we traded down here. There just wasn't that much interest in doing business here. We went through the process over the weekend of trying to find a bottom and accepting back into value. And I might argue that the acceptance back into value was this candle here. We came down overnight, played with that trend line again. Remember, that's that trend line. And I said it wouldn't go out without a fight. And that's exactly what happened. And we just popped right back up. And here we are now flirting again with this same trend line. If this is Coinbase, If we zoom out, I mean, it's incredible how our fate has been dictated by this one trend line over the past 6, 8 months, eh? So there is that original trend line off of the double top. So here we are playing with it again. Remember we said that the the bot is actually risking against, look at that wick right through that trend line test there. So here we are coming right back up against this trend line again. And I was really impressed with people on the site. When I woke up this morning, they were like, "Oh yeah, I totally took this El Tango, right? Look at the, I don't know whether you can see, nice divergence confirmed in MACD. Willie went stupid, nice W's, even more signs, double divergence here. Beautiful little W breakout in MACD here this morning. More W's off of the internals. And I heard people say that they not only did they hit this, and this is actually a really good example. Level oneers, you'll be doing this in the coming weeks when you do fibs. This is a really good example of AB equals CDs setting up, aligning. And Grim, if you watch this later on, try and remember this for the kids this coming week, because this is what I really like people to try and do is see if you can get ABCDs to align with things like reload zones and things like, and level oneers, you're not doing trend lines, we won't do that till early level 2, but hopefully what you guys see here is we go, okay, maybe this is a double bottom. And actually, I talked lots about this with different altcoins and stuff, right? Let the double bottom come in, then draw your reload zones. In this case, this is this fib from here back down to the bottom. There's your reload zone. Let it come down into here. And here's a great example where you got reload zone. Okay, I want to buy down here. Then you got A, B, C, D says, okay, market, if it's acting harmonically, it probably wants to come down into here. Look at that crazy ass fucking harmonic level there right on that trend line. That's just insane. Hats off to anybody who took that trade. I mean, it's a beautiful trade location. The bottom of value, trend line, below reload zone. I bet you that's like an 88.6 fib. We used to have a guy on the site who used to just live by 88.6 fibs. Where is that? 88. There it is. Oh, look at that. Oh, okay, yeah, well, I mean, 88.6 did get tagged there, but wow, what a level. Where the hell's damn arrow? There it is. So, come into reload zones, AB equals CDs, trend lines, and now get in there and start hunting W's, right? And in this particular case, last night I drew this. Oops. This one was just simply, if I change this to a line chart, you'll probably see it a little better. All right, there we go. Down, up, down, up, down, up, breakout, pop. So, and in this particular case, this is, and we often actually call this, I mean, it's a tough trade. Don't get me wrong. Trading is not easy. But we often call this like the noob stop right here, because the market will come down, it'll flush out these, and like on my bot setup, I like to have 3 lows to risk against. So this is exactly why we need to have those multiple lows. So the market comes down, bust those guys out, bust those guys out, but does not get through these lows, and then turns back up, and away we go. So, anybody who actually hunted this reload zone, oh my God, you deserve extra bounty points. That's just absolute brilliant trading. Very, very difficult. I'm not going to sugarcoat it, right? If you went like this rally peak down to that low, look how the market came right back into that reload zone. Just sick. You had to have like balls of steel to take that trade, but that's the trader's trade right there. Look at that, eh? Oh, just evil. So, I think now we're like down to like 1 hour, 2 hour charts. Hopefully you can see where this conversation is going. I don't see any reason why this 50% level can't be hit. It's perfectly logical. We showed you lots of examples off the weekly chart that 50% level getting hit. Why can't it work in this perspective? Seems totally logical. And then as I was sort of saying there about Colleen, if we look at the profile, you can see even just zoomed in on this range, there wasn't a lot of interest in doing business by the market there. When price came down into here, everybody just stopped. Remember, the market wants to do business. So if the price is down here, nobody wants to do any business, market's going to say, fine, let's go the other direction. And that's exactly what I think is going on here right now. So kind of interesting. So I would consider this sort of like, maybe, let's call it sort of fast swing traders. My hunch is this trade will probably be over by time this day is done. I suppose you could argue if we apply that we don't want winning trade to turn into a losing trade. If we just do 50% of the anticipated range, you can see move stops to scratch level hits. So at the very worst, you just walk away from these kind of trades just at scratch. That's the very worst. I do know Grim, he actually likes to take the whole trade and apply the bot trade metrics. So that would be something along those lines. But you have to have it pointing in the right direction. So move stop to scratch would be here. And now actually I think he might even be starting to trail stops. Any kind of market structure that shows any sort of signs of failure, just walk away. So that's sort of what I think this sort of, you could call this a day trader. The only problem I had with this long down here was that everything else, like all the higher time frames, were still pointing down. And so as a result, from the lower time frame perspective, we were still hunting shorts. So why don't we head off into that conversation? Day traders, as I had sort of said, I've been following this model and having fun with it. I do completely understand it's still in the vetting process. I'm still trying to see if the numbers even work on a site like BidMEX to even do this. And at the same time, too, I'm actually transporting these models over to things like the Forex market. And really, primarily, I'm the type of guy that I only want to trade. I've seen what OKCoin does. I've seen Arthur Hayes' fun games on BidMEX. I'm not overly impressed with quote-unquote Bitcoin forwards markets labeling themselves as futures. Why they do that, I have no idea. So this conversation about vetting setups, it doesn't end at Bitcoin. And if anything, this is just a really simple model. What's the daily and the 4-hour trends? If you can identify them and they're both going in the same direction, just hunt every setup you see off a lower time frame. So, here in the Euros case, you can see everybody turned up, daily up, 4 hours were up. We got a 1 hour fractal double bottom, which interestingly enough produced a false signal to begin with, but then resumed as the moving averages continued working bullishly. And so I just applied all the same logic. I found that working off 15 minutes, price wasn't just volatile enough, and there was just too many fractal signals. So in this particular case, I am working this Euro setup off the 30 minutes. And I got to say, it basically had you in the market on the long side. And you on a net basis, you actually captured almost all of this move up here. So I'm feeling pretty good about this model. Now, regardless of whether you believe you can make the numbers work on MEX or not, I'm more concerned about whether how it acts during trending and ranging market states. This is a trending model. So that means that during trending markets, it should kick ass, and during ranging markets, it should just get chopped up. And lo and behold, we went through a really nice dump there to begin sort of this recent signal reporting period. The most recent reporting period started over here. So that is, where are we here? Yeah. You can see institutions turned bear here. Right there. So that's basically here. You can see quite a bit of green, some teal. Then it's interesting as the market sort of tries to find a base and stop trending down in this case. This period here, you can see it actually started to rack up some losses. Then it went back into sort of its trending mode, started to book wins, some scratches, some wins. And then I noticed, and this is what I was talking about yesterday, yesterday was a really tough slog for this little thing. And really the whole point of this is don't bullshit, just take every goddamn trade and just live with the results. And you can see, I mean, yesterday was like win, loss, loss, scratch, loss. And it was a painful overnight here. But, you know, it is what it is. And actually it was interesting on the spreadsheet. You know, this is, that's the Euro one. Where are we here? The Bitcoin one, you know, the most recent report, it was loss, scratch, loss. Oh, totally painful. But the interesting thing is just in this reporting period, I mean, this reporting period, the first 100 trades, just beautiful results. This reporting period here, and again, this is, of course, a function of commission. I mean, keep in mind, we're suggesting we're paying almost half of our net gains out on commissions as it is right now. And people are telling me we're still too low. We're assuming 0.002 BTC in commission round turn. But at this rate, you can see 12 wins, 12 losses, 9 scratches, 50% win rate, but still coming out net positive. At a 50% win rate, still coming out with a net profit. So it just goes to show, you know, ironically enough, it's not really a question of being right or wrong in this game. It's just making damn sure that when you are right, you get paid relative to when you're wrong. This is a bit of a challenge. And then as I sort of said a moment ago, and it kind of makes sense. I mean, this has not been a very friendly trending signal here. It's been choppy as hell. So as it stands right now, you can see, and that's sort of why this is the last trade that's reported here. We've actually got a bullish turn here on the 4 hours. So this model now just goes back into the closet. What was weird is like last week I had talked about, okay, this model, where are we here? This model is produced, nice English, has produced a 4 hour bull signal, so I'm going to go back in the closet. And then literally the next bar, boom, nope, get it back up and running, away you go. So go figure, it's just the way that it is. You know, does this thing have legs? It sure looks like it's a good looking W, eh? I mean, you can see it across the board. And like I said, those lower time frame players off of that trend line, man, that was one hell of a sexy long trade in there. As I said, based off of this model, I was hunting shorts through this and having a pretty tough slog of it. But I got to say, you know, like, and as I said, you know, a big part of this site that I do is not about Brian himself. It's about the community and all the various different approaches and setups and stuff that people post in the lounge. And there were quite a few. I think Colin, he was pretty excited about this morning. You know, there were people at TRI who took this setup. So congratulations. Way to go. Kicking ass. So there you go. And I had sort of said that earlier. You know, today's conversation was going to be a hodgepodge of a whole bunch of different perspectives. It looks to me like these people who are hunting reload zones in reload zones, things like El Tangonators and stuff like that, they're loving it right now. At the same time, too, when we sort of zoom out, we look at the bigger picture, you know, what's going on here? And I still think it's sort of this just super messy flirting with 50% rules. Okay, well, I think that about summarizes what I see happening in the corn today. Anything else? This is it. You know, it's kind of a fun conversation we're having on the site. Julian loves using RSI, and he's one of the principals at TRI. And I didn't want to step on his toes too much because I know he's building out an RSI module for the education program. But I just put together a really cool, just sort of simple illustration of how I used to use trendline RSI and M's and W's in RSI to trade. And I've been sharing this on the site. It's really cool little walkthrough. I might do a video write up on it, and sort of add it to the education program. But site members and stuff, you can get this graphic at your leisure. If you don't have it, just PM me. In fact, here, why don't I just post it in the lounge so you have it? But nice little educational piece here for you this morning. I used to use RSI as sort of a way to measure the internal strength of any kind of bull or bear markets. And the simple principle is, again, what letter of the alphabet does Brian like, and does anything else matter? In this case, what we want to find is we want to find a situation where, let's say, there's an existing trend already working, something along those lines, and probably actually RSI aficionados would be like, there is the official trend line kind of idea, just connecting the dots. And if anything, this is a good example of it going the other way too. So, but I won't go there. We'll just concentrate on this. We change that to yellow. Okay, so we want to see a situation where one W, and really you might argue there's a couple W's in here, but I like this one, up, down, up, breakout. So in essence, the W, what I'm looking at here is this one, down, up, down, breakout. That stops the previous bear. We're talking about W's and RSIs. And you might argue that, like I had said a moment ago, this first one here. Let's see if we can just connect these. Yeah, something like that. So this one was sort of the check, and this sort of broke out. I mean, you might argue that you could do it off of that one as well, but I'll use this one. So the first W sort of says, okay, enough of the bear. I want to, okay, well, let's do the first one. Brian's having conversations in his head while he's doing videos to the public. That's always good. And then we'll do the second one there. In fact, actually, we might even do a third one here. So we will go boobity-boo and boobity-boo. All right. So using the RSI sort of thinking, the first W stops this bear trend. So we would just say, okay, the bear has been officially put on hold as of that mark right there. And I like to color them in this teal color so that you can sort of see. All right, we can even put sort of a horizontal line on that, or a vertical line on that, sorry. So you can sort of see exactly where I'm talking about in the price chart. So, we don't want that one though. We'll go like that. So this W right here, and that's this action, there's 3 bars. Everybody should look at this and go, oh yeah, that's a diamond. That's a nice fractal. That makes sense. So that W there stopped the bear. Then, okay, that's fine. So the bear has been put on pause. That sort of means, okay, now we're kind of going sideways. And it's the next W that actually starts that the bull can actually come alive. So that second W is there. Oops, hello. Bitcoin's breaking out. Bitcoin's breaking out. It's going. It's going. So the second W comes in there. So that means that the new bull started there. So bear there, bull there. I like this because it's interesting. This initial second bull didn't break out through the 50 line. We ideally like it to break out, but if it had like broken out, the W had come in through the 50 line, I'd be even more excited. I think you can make an argument this is just like further reiteration of the bull. in that you get another W. And I love this one because it's through the 50 line. Maybe we'll do this as purple. And you get another confirmation of the bull there. So that would be way over here. So it's a nice simple way to use RSI to sort of tell you, what stage are we in sort of the bull and bear conversation. So downtrend. First W stops the downtrend. Second W is your buy signal. We have a new uptrend, and then further W's just further validate the uptrend. Isn't that cool? I don't know. Anybody see that on the hangout here that I'm doing? I don't know. Maybe I'm just talking to myself. I've been blobbing for a while here now. Anyway, really good example of how you can use RSI to help you sort of frame where are we? Are we in a bull or in a bear? And you can make the argument, the first, and you can do it going the other direction, right, off of here. So the first M stops the bull right there. And heel. The second M, and is it through the 50 line? Sure looks like it. Right, somewhere in, and really, do you use this break or do you use this break? It doesn't really matter. But if we use that one, starts, really we use this one, starts the bear. That's what this is. First W stops the bear. Second W starts the bull. And then subsequent W's are even more bullishness. And really you might argue that probably your first M that will come in here, and keep in mind this is a very steep line, right? Something along those lines. So my hunch is, and it's tough to say exactly where this will come in, my hunch is there'll be some sort of pullback here, and that will set up a new trend line, probably off of this low here like that. So, if you were to say, okay, what's the market state right now? What's happening? I think you make the argument that we're in that third stage bull, and we're just waiting for the first M that actually stops this bull. In other words, don't get in front of this thing or you're going to get run over. You got to wait, and notice this candle, right? Woohoo, right? That's woohoo. Then you got to wait for the M to actually say, okay, this stuff has exhausted itself, this bull has died, and now we're going into bear correction. So really cool little tutorial there on how to use RSIs to help you understand trend strengths. I don't know. Hopefully that helps. Okay, so I think we'll probably leave it at that for today. I hope you enjoyed the presentation. Didn't see too many topic-specific questions, but we sort of walked through you guys. Fundamental conversation, weekly price chart conversation, and expectations over the next little while. What are the sort of position traders and swing traders thinking about things like CME price gaps? What does price action look like? The lower time frames looks like botters are going to be told to, botters are doing nothing, but algonators are going to be told to walk away at scratch. We're watching how price acts through this triangle. That triangle test of the top of the triangle resolution is a profit objective for sort of the lower time frame, semi-day trader, sort of day trader, swing trader sort of combination. And the day traders were hunting shorts, but we just got a signal that the day traders should cool their jets and wait for some sort of serious trend direction. Okay, I think that's the full meal deal. Hope you guys enjoyed that. Got some value out of all that. The only thing left for good old Brian to say is wish me luck driving out in the rain today, servicing the boy. Wish me luck that I give him an awesome afternoon because he deserves it. Have yourselves a great day. If you enjoyed this presentation, keep in mind we do this stuff 24/7. all day long, every day of the week. This is what we do here. And of course, if you need help trying to figure out what type of risk taker you are, how much capital you got to work with, why are you actually even doing this, and what do you want to get out of all of this? What kind of setups appeal to you? Are you a range trader? Are you a trend trader? What type of risk taker are you? Are you the type of person that just wants to build an index of these cryptos and just slowly dollar cost average your way into these names, a la little old lady? Are you a trader? Do you want to take appropriate stock market trading risk, or are you derivatives oriented and you want to trade short-term setups? All that kind of conversation, that's everything that we cover in our school program. And keep in mind, we're teaching a profession here. This isn't something that you just, I don't want robots here at TRI. Robots are useless. What I want educated people that know how to act in the marketplace, and that we work together to come up with good trading ideas. And just an FYI, what is Brian investing in right now? Ironically enough, Brian's really interested in fabricated paper. What is this stuff, Kevin? Drywall. Why? Show me the W's. Weekly W's are even better. So just, I eat what I teach. I eat my own cooking. And if you can show me a good-looking weekly W, I'll probably go buy it today. All right, guys. Have yourselves a great day. All the best, and bye for now.